G'day everyone, welcome back to Pete's Investing, July 7, 2023. This is the high grade copper update. On our weekly, we're still in a bearish momentum, likewise on the daily, so predominantly we're in a short trade environment. On the weekly, first off, we look at the triple moving average, that's still declining. Likewise, the CCI 150 moving averages and our oscillator is breaking down, so that's still in a bearish mode, has been for a few weeks now. On the daily, likewise, it's bearish. So when weekly and daily are bearish, we take bearish trades on the hourly chart. You can see here it's actually been bouncing a couple of times off this key support at 35,540 up to this resistance at 39,650, and it's now retracing back to the downside. Now, if we draw a Fibonacci on that level between that support and resistance area, you can see there it's bounced off the 61%, which is always a key area since our last update. It's bounced to the upside, so that's something to be mindful of. Now, if it's going to retrace back down again, if it breaks through that 61%, we're going to see possibly approaching this diagonal ascending trend line, and more closely at this smaller range between that low and that high. You can see there it broke through the 50% with that wick on the daily, but it's actually hovering in terms of the candle body around the 50% level at the moment. So again, this is at a crossroads if it's going to actually continue to the upside or continue further declines. But at the moment, the weekly and the daily indicators are showing declining momentum. On the hourly, you can see there we did have a few divergences that played out. You can see there that bullish divergence on the CCI versus the price. It bounced up and hit our target area. And from there down, we had another bullish divergence on the price versus the bearish on the CCI. Broke to the downside, and that happened to be off that key resistance as well. Broke to the downside, it hit our target area. And more recently, we had this bullish divergence versus a bearish on the price chart, and that actually also would have hit our target area. So let's draw a Fibonacci on that. You can see there what we do is we pick the closest where the breakout would have been, and the breakout would have been between that channel within that divergence range. So that's where you would have gone long, and our initial target area would have been that closest Fibonacci range between the 38% to the 50%, and it's actually hit that area, and now it's bouncing back down again. So that's actually worked out quite nicely as well. So at the moment, taking predominantly short trades because the weekly and the daily are showing short momentum. As well, we've bounced off that divergence. To understand also, we've got some another trading strategy here in terms of taking that momentum using the oscillator. And the oscillator, just remind you, is what we use down here. So when the weekly and the daily are in alignment, which they are at the moment in bearish, then we trade in the direction of the hourly oscillator, and that hourly oscillator back test looks like this. We've got the long back test here and the short back test here, and that's the result you would have got had you traded those going long and going short during that period. So you avoid taking those long trades. For example, more recently you would have avoided taking that long trade when the price is declining. And why do you do that? As I always say, whenever you avoid taking long trades when the daily and the weekly are aligned in the short environment. You would not take any long trades there. Alternately, you don't take any short trades when the weekly and the daily are going long. So to understand how to trade this and other trading strategies, subscribe to my Patreon page where we also look at weekly scans of stocks, currencies and commodities. Subscribe, like and share the channel. Thanks for watching, and see you in a future video.